Welcome and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. This show covers a broad range of topics that cater to the commercial real estate newcomer as well as industry leaders. I'm your host, Yannis Papadakis, Business Development Manager at Crexi, a comprehensive digital commercial real estate platform designed to empower commercial real estate professionals with the tools they need to discover and transact property. Today, we are thrilled to dissect the details and latest happenings in the world of single-tenant net leased assets with Landan Dory. A little bit about Landan. Landan Dory of Avison Young's Austin office specializes in the acquisition, disposition, and advisory of single-tenant net leased assets nationwide. Landan began his career at Marcus Millerchap, where he quickly became a top producer in his region. His first 2 years as a broker, Mr. Dory personally completed over $30 million in real estate transactions in 14 states, earning firm-wide recognition. Landan joined Avison Young in May of 2020 to kickstart the firm's growth and net lease presence in Texas. Landan is also the founder of netleasedbeast.com, which is a website, newsletter, and video series focused on providing the best single-tenant net lease news, research, and content for the net lease industry. Mr. Dory is a proud native Texan and is thrilled to be able to live and work in the greatest state there is. He attended Baylor University and graduated with his degree in finance and corporate strategy. At this time, he started and operated several small businesses while a full-time student. Wow, Landan, I knew you were impressive, but I didn't realize how many balls you have in the air right now.
Yes, it's just in my nature to try to stay as busy as possible. I get bored pretty easily, and I've always got something cooking, whether it's something on the personal side, business side, just get bored. So got to keep busy.
Busy is always better than bored. At least that's how I feel. If you're bored, then there's just so much to do and see and ways to grow, especially within this industry and the exciting world of single tenant net lease properties. It changes pretty quickly, wouldn't you say?
It does, and we've certainly seen that over the course of the past 18 months. And what's unique about the net lease side of things is it's not just a singular product type. It's a property type with hundreds and in some cases thousands of different tenants, all with their own strategies, territories, business plans, modes of growth, and all sorts of different things that can be affected both positively and negatively by things like what we've seen in the last 18 months with the COVID-19 pandemic.
Right. And I'm excited to dive in with you. But before we do, I'd love to get a little more information in kind of the story behind your career. Like, how did you first get into commercial real estate and what drew you to the single tenant net lease sector?
Sure. So going back all the way, I'm originally from Midland, Texas, which is just a small little oil and gas market out in West Texas. Growing up there, seeing the booms and the busts, I just really wanted to get away from it and experience something new. So unlike a lot of my counterparts from high school, I went off to Baylor, whereas they went to Texas Tech, and started studying there. I was studying initially a path towards banking. That's what I decided in my probably sophomore year that I wanted to do. And the only real reason I had to do that is because that's what all my friends' rich dads did. And that's pretty much the only reason. So started going through the coursework, quickly realized that that's not what I wanted to do. It was boring, didn't interest me at all. And around that same time, I began working for a developer/investor named Jimmy Banks in Waco. Shout out Jimmy. Jimmy's a really successful guy, and not only was he doing really well for himself, but he was having a lot of fun doing it. He's the type of guy who shows up to the office, boots and jeans. He's out on his ranch on the weekends, just having a good old time. And I just started asking him a lot of questions about what he did, how he got to where he was. And he slowly started to peel back the curtain as to how he started, how he got where he is. And I really started to see the potential there. So I was immediately hooked. My senior year, I started applying for commercial real estate firms, decided that brokerage was probably the best path to get the most exposure and make the most connections in the shortest amount of time. Applied to a lot of different firms. And at the time, Marcus Millerchap was the only firm willing to hire a college kid with no experience or connections. And Matter of fact, I didn't even choose single tenant for myself. It was just the only team at the time that was hiring. So it is all absolute happenstance for me. So I joined, got trained up. I worked really hard, usually 12 to 14 hours a day for the first 2 years. And a couple of years later, here we are.
Wow. And, it's funny, I have a similar background in that I started at Marcus Millerchap. And man, in order to make it, in commercial real estate in general, but especially at Marcus, you really need to kind of go the extra mile for that first and second year to give yourself a chance to really jump off and be successful at this, which it looks like, you're not afraid of getting your hands dirty, which I'm sure is what's led you to be as successful as you are today.
Yeah, well, get your hands dirty, keep your nose clean, and just do a good job and work for your clients, and you can go far.
Excellent. So what are some lessons that you learned early on that you think have served you well as a broker?
One thing I learned very early, which I didn't really have a choice, but I came to appreciate it later, was to specialize in one single asset class. There's a lot of brokers who go out there and they try to get any deal they can, no matter what it is, if it's multifamily, multi-tenant retail, net lease, industrial, and they don't really give themselves an opportunity to specialize. So the fact that I was already on track to specialize in one single product type was immensely beneficial because it was that much easier to become an expert in it that much quicker. I made a huge mistake. It ended up not turning out so bad, but early in my career, I took on the project of trying to sell a hotel out in New Mexico. Even at the time, and when I was really young, I knew it wasn't my expertise, and so did my client at the time, but they really liked me, really trusted me, and they wanted me in their corner on the project. So, with that kind of a review, when you're probably 22 years old at the time, you can't really say no. And man, was that just a really bad mistake. Hotels are just so vastly different than net lease in a lot of different ways. And I spent most of the time when we were shopping for a property initially, and when we finally found one that we liked and we're under contract on it, learning the hotel industry, how to underwrite these deals, and just what makes sense in one of these deals. And I was definitely a liability throughout that transaction. I was not an asset to my clients, and fortunately, the deal was good enough that my guys still got a really good deal. And my butt kind of got saved by the fact that we had one of the largest hotel teams in the firm in our office at the same time, and they were able to help me limp along through the whole process. But it was a pivotal point for me, recognizing that there's a lot of value in specializing in one thing, and it's better to go a mile deep and an inch wide than a mile wide, inch deep. And another thing that I learned is this business is all about people. In a lot of ways, I initially learned the business by focusing on the deal and the transaction and really trying to keep up this insane activity level in prospecting and deal nurturing and all that good stuff. And this wasn't really allowing me to build relationships, which if you've ever been in the same room as someone in commercial real estate, they'll be the first person to tell you that this business is all about relationships. So when I joined Avison Young, I did a full reassessment of my business and my strategy, read a lot of books on business and brokerage, found some great mentors, and I learned that I really should be focusing on the people side of things, how to make somebody else money or protect their investment based on their own unique investment goals. And truly, that simple shift in my own mindset and my own strategy really made my business explode. My pipeline is probably 3 or 4x what it was ever over at Marcus and Millerchap, and it's really been a rewarding shift and a simple shift. But even in the middle of the pandemic, when we were in the pandemic, it was the exact same time I switched firms. Pipeline's never been more full, and now I can be much more selective about the deals that I work on and the clients that I work with, and all that came from just simply refocusing and focusing more on people.
Wow. What an interesting time to make that shift, when everybody else is, grabbing an umbrella because they think the sky is falling. You're out there with a bucket and making lemonade. I think that's amazing.
Yeah, I had a lot of good gray hairs in the office, as I call them, who had been through at least one, probably two cycles in some cases. And a lot of those guys started during a downturn. and they are where they are today because of it. And they said, yeah, that's the time that you go out there and you make a name for yourself, because all the 1 foot in the door, 1 foot out the door brokers, those are the guys that are going to leave the industry and go do something
Right.
else. So your market share has the potential to double just from other competition leaving the market.
I think staying power and again, being able to commit to something like specialization really does speak volumes to, what is possible within this industry when you really, hone and focus on something. What what brought you to Marcus Millerchap at first, and then to Avison Young later?
Yeah. So, like I mentioned, when you're 21, 22 years old, you don't know anything about the world. Marcus and Millerchap was the firm that was willing to take a risk on me and hire that college kid. And for that, I'm very grateful. And I knew Marcus and Millerchap had a great training program and a really good platform. I also had a mentor at the time who told me that Marcus is a really great place to start your career for that reason, but you likely won't be there for more than 3 years. And I never fully understood that or believed him because I was really happy with my environment there. I was on a great team, started closing a lot of deals, and began really building a great career. And sure enough, I reached that point where I felt like I had outgrown my environment personally and began looking for some new opportunities. Here in Austin, I really like to network and I like to meet new people, specifically guys here in my industry, because Austin's a pretty small town. There's not a lot of brokers here, so you can get to know everyone pretty quickly. So, with all these relationships, I had a lot of other brokers who knew me and knew my business. And again, with Austin being such a small city, in a short amount of time, I had a lot of interest in me personally, and half a dozen other firms recruiting me, wanting me to come do what I did over there with them. And in a lot of different ways, the grass was greener. So one particular thing caught my eye, however. I saw that Avison Young had recently picked up a very prolific triple net team from, well, it was called Kane at the time, led by Jonathan Hip out of DC. I thought that was really interesting because I always viewed Hip as really the godfather of net lease. I mean, he's been doing it forever. He's been doing it at a high level forever. And I even remember I took a lot of their research and implemented that into my own business and my proposals and offering memorandums when I was coming up in the business too. So I did what I do best. I gave old John Hip a cold call and see if there was an opportunity there. And lo and behold, Texas was a market that they were really wanting to get into. So that opportunity became available for me to join and get the service line started here in Texas. Texas is a phenomenal market for net lease investing. One, it's huge. Two, we don't have state income tax, so it's very investment friendly. And three, it's always been very underserved from specifically a net lease brokerage perspective. In fact, there's a lot of California net lease brokers who focus their entire businesses exclusively on Texas as their target market for this very reason. So my goal in coming over was to try and gobble up as much of that market share as possible.
Wow. So what would you say are some of the most valuable tools that you've learned, not only to operate, effectively as a leader, but also provide the most value to your clients?
Sure. So, as a leader, the best advice I was ever given was work to try and make the people around you as successful as possible. I think a lot of the times leadership gets this structure of it's almost like a pyramid where the leader's at the top and everyone works for the leaders. And some really smart people in my life told me you take that and you invert it and you work for them, make them as successful as possible, and that will in turn lead to further your own success. Because at the end of the day, if you want to build a successful team, people have to want to work for you. And to do that, they need to know you are as invested in their success as they are. I actually had a really proud leader moment recently, just this week, actually. I have an intern who is transitioning to brokerage named Parker. Shout out Parker. He's been with me for almost 2 years doing mostly analyst and intern work, but just this week he closed on his first deal, which was a Church's Chicken down in Brownsville, Texas.
Hey, way to go, Parker.
Yeah. Stoked for him. He sourced the deal, found the seller, and it just so happened that we had a 1031 buyer in tow, and we were able to put the deal together off market. So being a part of that and really seeing someone go from scratch like I started to now sourcing and closing a deal and putting money in their own pocket as a result of it, that was really cool. And that's the same approach I really take with clients as well. I really take an advisory approach. I ask, what can I do to make them more successful? And 95% of the time, the answer is nothing right then and there. I can't do anything other than build a relationship with them and learn what their strategy is. So when the day comes where I can help them in buying or selling or renegotiating a lease, I'm their first and their only call. So I'm really basically a free advisor until someone's ready to buy or sell. Uh, that same approach is why I started the Net Lease Beast. One day I was looking for a singular source of information on the net lease industry with news and with case studies, current tenant information, things like that, and I couldn't find one. So I started up this newsletter that quickly gained thousands of followers. And in fact, I closed my first deal last month that was a direct result of someone reading my newsletter and contacting me to sell their property from it. That same client and I are now working on 3 other deals as we speak. Once my team and I recognized how hungry investors were for good content like this, we expanded that into a video series as well about 2 months ago, and which I've had a lot of people reach out and comment that the content's really valuable there too. So really, to answer in a nutshell, I just try to be a resource to the people around me.
That's amazing. I mean, it's the industry itself can be tough with how competitive it is. So to see somebody really embrace collaboration and trying to uplift the people around them, it's just such a better way to operate because rising tide lifts all ships. And I feel like if you're really sharing that knowledge and that experience and that wisdom with your intern that goes from intern to closing a church's chicken, like that's proof right there that you can have a positive effect on somebody within you. And my guess is that he's going to want to stick around and keep doing deals and keep learning more and keep contributing to the team and the growth and the content that you're creating. So love to hear it. I love to hear stories like that.
Yeah.
Now, zooming back a little bit, let's cover the fundamentals of single tenant net leased properties. For those in our audience listening who may not know, what is a single tenant net lease?
Yeah, so it's pretty self-explanatory. Single tenant net lease, meaning it's a single tenant property. It's got one suite and one user at the end of the day. Net lease usually defines the way that tenantship is structured. Most of these leases are triple net, so the tenant pays for things like taxes, insurance, and maintenance, in addition to the base rent that they pay to the landlord. Usually these properties are leased to widely recognized names like Starbucks, Dollar Generals, and Walgreens. Deals are typically between $1 and $5 million, though they can be greater or less, and they trade at cap rates anywhere from between 4 and 8%. But in this market, I've seen things trade sub 4%, which is historically crazy. But they also come with long-term leases as well. And the new leases for these things are generally between 10 and 20 years of guaranteed base rent. Investors like these properties because they're management free. So a lot of investors can comfortably buy these properties in different states. It's really common for investors in high cost of living places like California and New York to invest in southern states because they can get a better return than in their home state, still with a strong credit tenant that they are very familiar with.
Now, I am aware that there are several different types of lease structures within single tenant net lease properties. Can you go through some of the differences between, a net lease versus a double net lease versus a triple net lease? Like, can you just break those down for us?
Sure. So the 3 nets apply to those 3 things I'd mentioned earlier: your taxes, insurance, and maintenance responsibilities for the property. So a triple net deal, also known as an absolute net deal, is where the tenant pays all 3 of those things, and including things like the maintenance for the roof and the structure of the building, should you get a leaky roof or something go wrong there. A double net deal is the same thing, but usually means that the landlord is responsible for the roof and structure of the building, as well as some other things like parking lot and the HVAC. It's less common, but you can see single net or even gross lease properties where the landlord pays for more of those things or even all those, but it's not as common in single tenant deals. But you've also got one other type of lease structure, which is a ground lease, which is at face value probably most similar to a triple net lease. So the landlord has no responsibility, but the landlord only owns the dirt and not the property itself. So the tenant actually has a leasehold ownership interest in the improvements, So they're the ones that actually own the building, and they're the ones who get the benefits of depreciation on the asset, whereas the landlord in that instance wouldn't be able to get those benefits.
So just from an investor standpoint, why would someone consider a double net over a triple net, or a ground lease over a double net? Where does the interest within those different lease structures lie?
Absolutely. So I'll start with ground lease. Ground leases typically have lower rent than fee simple ownership lease properties. Um, and the long-term benefit there is that if that tenant ever vacates, the landlord will quote unquote inherit a building, get a free building out of the deal. Also, with them having lower rent, they trade for lower multiples, though here recently, again, prices are just doing some crazy things, and some ground leases can easily be in the millions and millions of dollars. A double net lease, on the other hand, it does come with landlord responsibilities, so that makes it a little bit more hairy and management intensive. But depending on the property type, you can find a double net property, compare that to a triple net property, and you can capture an additional anywhere from 50 to 200 basis points more on your cap rate in yield by going that route. So your risk goes up, but your return also goes up as well.
Interesting. So it sounds like, depending on what your appetite is for return and risk, different lease structures may suit you better.
Exactly. Yeah. And that's why it all goes back to the individual investor's investment strategy, what they want to accomplish and how can we help them get there.
Wow. Now, why would an investor today consider a single tenant net lease asset? Considering, as you said, prices are doing some crazy things. Like why should investors pay attention to the STNL market?
Well, there's a lot of money moving in that direction right now. And I'm not saying that's the reason you should invest in net lease properties, but in a time like we've gone through recently, where there's a lot of turmoil and certainly some other assets are a lot less appealing now, um, single tenant can really stand ahead of the pack because you got a property with no management responsibilities, can be anywhere in the country, usually with a long-term lease to a corporately backed or publicly traded tenant, which is really valuable. In fact, you can check the headlines right now, go on Globe Street, or might as well point you over in the direction of Net Lease Beast. And there's a lot of recent articles and news headlines about massive firms launching these brand new real estate funds targeted towards net lease properties. KKR was the biggest and the most recent one. They're launching a $3 billion fund to target these properties. But even here in Texas, there's a lot of local groups who are raising money internally with their own equity pools, and they're trying to target 30, 50, $100 million worth of net lease deals in the next 12 to 24 months. So everyone's really seeing it, and everyone's trying to go in that direction in some capacity.
Yeah, I agree with you. I've definitely heard a groundswell happening where investors are who may have 10 years ago never considered a single tenant net lease property.
Mm-hmm.
Now they're hungry for it because of all the benefits. So why don't we dig into some of the pros and cons of investing compared to some of the other assets that are out there?
Sure. Well, the big benefit is the management responsibilities or lack thereof. When that roof leaks, you aren't the one that the tenant's calling to fix it. And in most cases, that's going to get repaired without you as the landlord even knowing about it. So it really is true mailbox money for the commercial real estate world. This makes them perfect for higher net worth individuals with full-time professions that just need to place money in something to get a return on it, like doctors and lawyers and folks like that, who want to own commercial real estate but don't want the management headaches that come along with it. These are also excellent for what I call last mile investments for long-time real estate professionals. So picture the multifamily investor who's been a full-time landlord for 30 years. Now he's retiring, he's wanting to spend more time with his grandkids or just do some fishing, but he's got millions or tens of millions of dollars tied up in real estate and multifamily. Well, he can either sell his properties and retire so he doesn't have to take care of those properties anymore, but then he's paying massive taxes to the government. Instead, he does a 1031 exchange into net lease properties, pays no taxes, and he keeps his equity and his cash flow alive. So there's a lot of different scenarios where this makes sense for folks.
I mean, it sounds to me, and this is part of what I did while I was at Marcus, that there could be some pretty significant opportunities if you're already owning and managing a management intensive asset to either replace the income or increase it while getting rid of all those management responsibilities at the same time.
Yeah, I mean, that's a lot of people decide to go that direction.
It sounds too good to be true, but I actually know that it is true. And let's go to the other side of the coin now. What are some drawbacks that you would say about that?
Yeah, that's not to say there's not drawbacks to it. So one con is with net lease, there's minimal to no value add that an investor can do. So pretty much what you buy on day one is what you're going to have on year 20 in most cases with your escalated rent. There's not much. It's not like you can go into the units and rehab the units and add a bunch of value and then go sell it from then on out. I hate to use this cliche because it's so overused in this space, but these properties are a lot more like bonds. I mean, you're basically with let's say Popeyes, for example, you're buying a 20-year Popeyes bond because they're the ones guaranteeing the leases. Another consideration which has been discussed more in the past year than I'd say the last 20 is inflation. So if you've got a 20-year fixed rate lease and we see a period of high inflation like we saw in the 70s and 80s, that fixed rate lease becomes less valuable over time. And this is why most of these leases traditionally have these 5 to 10% rent escalations baked in over the lease to offset this. But if we see that level of high inflation again, it wouldn't be impossible for that inflation to outpace the dollars you're getting on that investment. The last thing is, it's what I call sleep at the wheel syndrome. And this is a exclusively user error con that comes with net lease. This happens when you get so used to getting that mailbox money coming in off your property that you actually start to neglect what's going on with your property or your tenant or what's going on in the market. Some side effects of this syndrome are not recognizing that the market that your property is in is on the decline, or your tenant is starting to have some financial issues, or your rent is getting higher than what that tenant can pay for that market. All these things can easily go unnoticed until it's too late. And this is why it's crucial to have a on-the-ground expert like a broker or an advisor who can give you intel into what's happening in that market or with that particular tenant. That's part of the reason why it's frustrating when brokers from California or different states are trying to compete for deals in Texas, because 90% of these guys have either never been to Texas and certainly never seen the property that they're calling on or talking to an investor about or trying to sell to an investor, nor do they have any familiarity with the market. I've seen a lot of investors in not very long of a career make some poor investment decisions based on the fact that some broker out of California told them that this Burger King out in middle of nowhere, Texas, paying $200,000 in rent's a good investment. And, somebody's stuck with that now. Someone's left holding the bag.
Very true. And I think that really comes down to, if you're going to buy a net lease property, talk to an agent that specializes in net lease properties. If you're going to buy a hotel, right, talk to somebody that specializes in hotels. Like I really believe that, and I can't stress it enough. You really want to go to the expert, because the expert's going to see an obvious pitfall that the neophyte won't.
Right. Exactly.
All right. Moving on, through the pandemic, it seems like investors of all sizes have, increasingly turned to the net lease sector as, preferred assets. What does the current trading volume look like for single tenant net leased assets, and what trends have you been observing?
Well, again, it's hot right now. The biggest problem I have in my own personal business is just finding inventory. It doesn't even have to be great inventory in some cases. It's just finding something that one of my clients who's got money either on the sidelines or sitting in an exchange account with the clock ticking can go out there and comfortably buy without paying a 3.5 cap for it. Like just this week, I saw 3 properties in Texas hit the market at a 3.5 cap, which is insane. But what's great. Single tenant transaction volume was one of the first to reach pre-pandemic levels after March of last year. They were the quickest ones to bounce back, unlike multifamily and a lot of other areas. So it was really only a small hiccup for transaction volume and investor interest. Investor interest actually went up. People didn't want things like multi-tenant retail because much of it was closed, so there obviously was no revenue. And fewer people wanted things like multifamily as well because of conversations and fears around eviction moratoriums and the concern that they wouldn't be able to collect rent. What people did want was the Starbucks and any other brand that had a 15 to 20 year corporately guaranteed lease, many of which of these properties were still open throughout the pandemic and actually thrived throughout this period.
Wow. You had mentioned that you'd recently seen some sub 4 cap deals come onto the market. I'm really curious, who was the tenant there?
So one of them was a Chase Bank down in San Antonio. I believe NAI got the listing on that one. There's been actually a handful of Whataburgers here in the Austin area and Dallas that hit. Let me see if I can give you another one. This wasn't as recently, but a couple months ago, Chick-fil-A for a 3.5 cap as well. So, I mean, all those are great tenants and great credit, but still, that's a low return.
That is a low return. And I mean, there's got to be something about, that location maybe specifically that would, lend itself to such aggressive cap rates. Like, I don't know, were the deposits at that Chase, like, 3 states combined, or, were the sales at the Chick-fil-A, crazy? Do you have any insight on how it gets there?
Well, all Chick-fil-A's have crazy sales. I mean, they're the number one
true.
across the board.
That is true.
I didn't look at the deposits on the Chase. Now you've got me curious. I might go back and do it, but no, it's in Alamo Heights, which if you're familiar with Texas or San Antonio, that's like the premier area of San Antonio. That's where you want to be. That's where you want to live. That's where all the action happens. It's a really well located site.
And, just to kind of as a side note caveat, every tenant within Net Lease, there's different things that you're going to look for in terms of, what makes this a strong choice as an investment property. If it's a bank, you're looking at, deposits. If it's, a QSR, quick service restaurant, you might be looking at sales or rent to sales ratio. How, I'm sure it takes time to really grasp each of those intricacies for each tenant. That is really why you want to have an expert on your team that can say, hey, this is a good deal, it's a strong deal, not just because it's a good location, it's in a good market, it's a strong lease, strong guarantor, but here are X, Y, and Z other reasons why you should be considering it.
Yeah, I mean, each one of those areas, you hit several of them right on the head. Rent to sales is really big with QSRs. Deposits are really big for banks. They all the different tenants have their own metrics that's going to make them valuable. Like for collision centers, it would be what insurers are they partnered with and how many cars do they see go through there. Same thing, car washes, how many cars do they do on a daily basis. Some of those data points you have access to and some you don't.
And for the ones you don't, I mean, are you just kind of like, how do you, is it a finger in the air?
Yeah. Well, I just make sure there's still batteries in my crystal ball and make sure it's going to be a good investment in 20 years. No, I mean, that's where the old school broker feel and the fundamentals of this job come into play. Does your tenant have sustainable rent? Is it in a high traffic area? Is there good population density? Is the population going up? Is it going down? Who are the major employers? What's their long-term perspectives look like? I mean, there's 1,000 different ways you can skin that cat. And the more those data points that you look at over time, you'll start to get a picture of, hey, is this going to be a good long-term investment, or is this something that I'm starting to smell a little bit more risk than I thought?
Right. And, kind of pivot from that, what are some examples of operators that are seeing, the most success in today's landscape, and why do you think they're doing so well?
Yeah. Well, I'll give you my winners and losers. How about that?
Let's do it.
The winners right now are any tenant with a drive-through. When the pandemic hit, most dining rooms obviously were closed, but not the drive-through side of things. And as a result, drive-through sales skyrocketed. And now nearly every major QSR has started redesigning their stores with double and triple drive-throughs to meet this demand. I actually did a video on this a couple weeks ago, just walking through some of the new tenant concepts, which some of them are pretty cool and some of them are pretty out there. But the point is, everyone's going in that direction. They're really focusing on that quick delivery, quick sales, and basically getting the customer in and out as quick as possible so you can make a buck off the next guy.
Right.
With that as well, there's a lot of new tech coming out, which is supporting that. We can talk about that here in a minute. The other winner through the pandemic, and really the darling, was the dollar stores, and specifically Dollar General. Dollar stores were deemed essential retailers pretty early on, so they remained open when many places had to close down. Therefore, the demand for these deals went through the roof. And as a result, last time I did the numbers, the average cap rate for one of these deals dropped by about 100 basis points between pre and post pandemic. So those were really flying off the shelves. Now, Dollar General specifically is doing things like offering fresh produce and expanding their healthcare line, which is only going to increase their offerings and their revenue streams, which makes them that much more attractive. The other winner, I'd say, is going to be single tenant industrial. If it wasn't at the exact same time, it was right around the same time that single tenant net lease transaction volume rebounded to pre-pandemic levels. Industrial did the exact same thing. Industrial is really hot right now because e-commerce is obviously booming. And there is a sector within single tenant, which is single tenant industrial. And we're seeing a lot of sale leaseback activity specifically. So if you go on Crexi right now, go by single tenant industrial, you'll see a lot of names you've never heard of, but they're doing sale leasebacks on their own property because, what 3 years ago may have traded at a 9-10 cap. Now you're seeing someone can trade that at a 6 cap, and the operator of that location can go out there and make a lot of money off selling their property, and they can therefore become the tenant.
Right. Now let's take a look at the other side. Who took a gut punch? These last 18 months. Who's on the other side of the coin here?
Yeah, the big loser was definitely casual dining. These are the restaurants like your Applebee's, your Buffalo Wild Wings, those guys who it's 100% is of their revenues comes from dine-in only. And with all these dining rooms closed, their revenues basically went to zero for whatever portion of the pandemic their state was allowing dine-in or weren't. They're starting to come back now, but it's very slowly. We're even seeing brands like Buffalo Wild Wings. They're starting to implement drive-throughs to be more attractive and more versatile, like QSRs. The second one that comes to mind are pharmacies. Now, 2 years ago, pharmacies were one of the trophy assets that you can buy. You had a CVS or a Walgreens. I'll throw Rite Aid in there, but mainly CVS and Walgreens.
Great, generous. That's generous of you.
Yeah, just to give it a round 3. But those 3, really those 2 were, that was a mantelpiece. That was something that you were proud of, and that was something that always did really well for you. Now that Amazon has entered that space, the investor optimism has gone down tremendously in that area. We've seen cap rates start to increase. We've seen a lot more staying on the market a lot longer. And not only the Amazon effect there, but pharmacies are pretty unique and they're very difficult to retrofit. Let's say you do have a Walgreens and Walgreens goes dark. Okay, who's going to take over a 15,000 square foot box, right? There's not a lot of other users that can take that space other than maybe a dollar store, maybe a Goodwill or a pawn shop or something like that. But there are very few other corporate credit tenants that can go in there, take up all that space, and certainly pay the rent. Those things are really expensive. And if you're looking at a $60, $70, $80 a foot Walgreens, having to replace that with someone paying market rents of best case scenario, $20 a foot, yeah, that's scaring a lot of folks away. Let me give you another one. This is not as a result of the pandemic. This has been an ongoing trend, really, with the advancements in technology. But banks, Yannis, when was the last time you actually went to a brick and mortar bank?
Ooh, that's a good question. I actually have to think about it, which probably is going to illustrate your point.
Exactly. Yeah. I can't think of the last time I went to a bank either. I think not even when I got my home mortgage. Like I didn't have to do any of that stuff. But that's exactly the point. I mean, you can do 99% of what you need to do at a bank from your phone now. So you don't have to look too far to find banks that have been closing left and right all across the country. They also have a similar problem to pharmacies in that they're really expensive when you first buy them, and they're really difficult to repurpose.
Right. What do you do with the vault, right?
Yeah, exactly. Well, there's not a lot you can do, but one of the things that I think is really interesting, especially as the cannabis industry is starting to become a little bit more mainstream, spread into more states.
Oh, okay. Yeah. I can see
Yeah,
that. It's a safe room for cannabis.
exactly. Yeah, I think the vault would be great for actually storing some of the high dollar merchandise for some of these brands. You've obviously got the drive-throughs there already, and I
Yep.
mean, for a user of that, whether it's medicinal or recreational, how cool would it be able to drive up to what was once a Chase Bank and have the little tube come down and send you your prescription right there?
That's great. I thought you were going to say, hey, escape rooms are just going to get a lot harder is what's going to happen.
Yeah, you'd have to be pretty impressive to get out of those vaults, and I don't know any escape rooms that can pay $100 a foot in rent like a lot of those banks can.
That's true. I typically see them in areas where, the rent is almost free. So that
Exactly.
makes a lot of sense. Wow. So, it sounds like within Net Lease right now, there have been some pretty pivotal changes to, the way retailers are doing business as a result of the pandemic, um, for pharmacies and, well, for pharmacies and casual dining, I mean, obviously there's no dining room. You're going to have to adapt like Buffalo Wild Wings has been doing. For pharmacies, I think we're starting to see more clinics or walk-in clinics like within the pharmacy, some like additional
Oh yeah.
draws to those locations. Do you foresee more of those kinds of adaptations happening within retail for tenants like pharmacies, banks, casual dining? Are we going to start seeing drive up banks with QSR codes that you can buy Bitcoin from, or whatever the adaptation is? Are you starting to see any of that now? Is there any rumbling for kind of a change to the status quo?
Yeah, I mean, you are, if you're not seeing that in real time, you're seeing it being talked about, and you're seeing these conceptual ideas being thrown out there left and right. I don't know of any banks that are doing QRs where you can go up and buy crypto, but just this year, 7-Eleven is rolling out their own QSR concept within some of their stores. So they're looking for an opportunity to expand their offerings that way. I mentioned what Buffalo Wild Wings is doing to expand that way. This is nothing new, but some brands like KFC and Taco Bell, they've been doing dual concept locations for a long time.
Everybody knows about the KFC Taco Bell. There's a famous song about the combination KFC and Taco Bell. Oh no, it's a Pizza Hut and Taco Bell, I think is what it is.
Is it really? It's got to be a country song then. I haven't heard it.
It's a rap song. I'm going to send it to you
Definitely haven't heard it.
because I feel like as a Net Lease guy, you'd appreciate the combination Pizza Hut Taco Bell Rap.
Yeah. Well, have you heard the one that's in all those commercials right now? The Applebee's song.
No. Oh,
Oh,
yes.
it's in
And it
all those
blew my
NFL
mind.
commercials.
It blew. I was like, what is this? And I
It's like
couldn't believe it was.
how much did Applebee's have to pay for that? Especially to get it on all the NFL commercials. But hey, that's the point. Like all these brands are looking for different ways to adopt and get themselves out there in a way that they haven't had to do before.
It's better than Kanye's new album.
Yeah, not a fan of that. I think Certified Lover Boy had him beat by a ways.
Yep. All right. Now, moving on. What is driving this surge? Because it sounds like, okay, obviously we've seen this change over the last 18 months. Obviously there's been a lot of factors contributing to it, but why Net Lease as opposed to, there's other great asset classes? What's driving really the surge and like the crazy demand for these properties?
Sure. Well, one big thing is they performed like rock stars throughout the pandemic. The way that they're uniquely situated and positioned and the businesses that they operate just knocked this whole pandemic thing out of the park.
Right.
Second, same issue that I mentioned with pharmacies earlier with the difficulties of retrofitting them. It's the same reason why big box retail has been sucking wind for a while, and why a lot of things like Big Lots or whatever it was, they're now Spirit Halloween, or they're sitting there as a anchor in an empty mall or something like that. Net lease doesn't really have that issue. I mean, there are hundreds and hundreds of QSR concepts alone that if one blows out at any point in time, there's a long line of guys who are looking to expand and get new locations.
Right.
So they're very adaptive, very versatile, and they're all extremely well located too. So, let's say in 20 years from now, QSR is not even a word that's in our vocabulary, or you and I are joking about how that used to be a concept. Whatever could happen in 20 years, it's still the most prominent either location or corner on a major thoroughfare, and people are going to see it, whatever it turns into in 20 years from now. So there's just a lot of long-term potential.
I think anybody can agree with that. Look at your hometown, look at where you grew up. Where's the McDonald's? How long has it been there? Where's the Walgreens? How long has it been there? Right. A lot of times these locations have been there for a very, very long time. And it's because, they knew early on by selecting these superior locations, it's really going to give them longevity and the ability to continue to thrive, or at least give them the best chance to survive and thrive in that market. So a lot of times once they drop anchor, you can build a house on that boat.
Yeah, exactly.
So tell me a little bit about adaptive reuse, operators adapting their business plans post-COVID. And we've touched on this a little bit, but, aside from things like, multi-lane and drive-throughs, which everybody really wants right now, what other things are we seeing?
Yeah, so a couple brands that have really exploded throughout all this are your Grubhub, your DoorDash, and those guys. And everyone wants to either order food from home or do curbside pickup, and those apps have really stepped in to gain a lot of market share there. So those brands have started partnering heavily with all these brands to make that a mutually symbiotic relationship. I have no doubt that will continue to expand and unfold as time goes on, and as that industry gets a little bit more tested, and as those big players start to try to elbow each other out. Another thing that I think is pretty interesting are ghost kitchens. I think one of the big ones right now is Reef, who just announced a major partnership with Wendy's.
And I'm going to pause you for a second. For those that don't know, can you explain what a ghost kitchen is?
Oh yeah, absolutely. So a ghost kitchen is it's a non-primary area kitchen location that sells, or actually distributes through Grubhub or DoorDash or one of those brands. It distributes your common brands like Wendy's or McDonald's or whatever, same recipe, same cooks, same ingredients, all that stuff, but they set up a location in someplace like an industrial park or somewhere where the rent per foot is extremely low because they don't need it. They're focusing on delivery and primarily just delivery. So they could, so I've got a lot of thoughts on this that we can go into. But that's one thing that I think is pretty unique. Wendy's announced that they're going to be putting 4,000 ghost kitchens on the ground over the next, I might be wrong on this, but I think 5 years, which, and that's just the first one to the table. There's a lot of other smaller brands already doing it, and I have no doubt that more big brands are going to adopt that soon.
So what happens if you happen across one of these secret Wendy's ghost kitchens? Can you, knock on the door and order, or is it solely operating through these apps?
I'm 90% sure that it's going to be solely operating through these apps, because one of the big benefits that these groups are touting is the fact that they can cut their overhead expenses and labor costs by the simple fact that they're not paying people to clean up the restaurant. They're not paying people to take orders. It's literally just
insurance, just insurance alone with customers coming in and out of your restaurant. I mean, yeah, I can imagine that there's a lot of opportunity there. I mean, especially like, if, God forbid there's another, pandemic or something worse and, people can't go into restaurants anymore, you can continue to operate. You've been operating without, losing any of that, potential revenue that you've, built up at that location.
Yeah. Yeah. The conversation that's being had about that right now, and this is, I'm not calling it concerning yet, but it's something I'd be thinking about if I owned like a Wendy's, for example, is, I think your average Wendy's does 1.7 million in AUM, annual unit volume. Now, with 4,000 new Wendy's locations, ghost kitchen locations on the ground, how much of that revenue is going to be gobbled up by these new locations? Is that going to
Right.
be significant? Is it going to be enough to make the rent burden that much more strenuous for the franchise operator at that existing location? We don't know. It's too soon to tell, but it's certainly something that we should be watching.
So what should buyers be looking for when investing in a single tenant net lease asset? Are they researching? I mean, obviously go to Net Lease Beast. But what other things can you equip a buyer with in order to start coming to some better decisions?
Sure. So the biggest and most important thing, whether it's apartments, the most important thing is location, location, location. So
Yeah.
you need to have a location that can, for the tenant there, bring customers in, and you got to think more long term too. So when and if that location or that tenant blows out in 20 years down the road, do you still have a valuable enough location that some other operator is going to want to come in and take? And that's why things like hard corners are super valuable, as well as out parcels to major retailers like Walmart or Publix.
What would you say are your biggest takeaways you want principals to consider when eyeing single tenant net lease as a potential investment?
I'd say call me first. Uh, but seriously, there's so much opportunity in this space right now for all the reasons that we discussed earlier. Um, there's also so much influx as a result of the pandemic and changing consumer demands, e-commerce, etc. At the end of the day, net lease is such a phenomenal way to invest, but find yourself an expert that you can trust to advise you so you can make the best decision possible. That's really all that matters.
Do you have any parting words or advice for brokers looking to become more active in the space?
Yes, I'd say if you're a new broker I'd say if you're a new broker entering to the market, the biggest and best thing you can do is hitch your wagon to a more experienced or senior broker who's active, has a strong track record and a good reputation, and who's willing to invest in you. Your goal for the first few years of your career should be to learn as much as possible. And there's no great handbook that I found for this industry. It really only comes from experience, and you can get a lot of experience in a short amount of time with somebody who's very active. The second thing I'd say is be willing to work hard. I tell young guys to view their first few years in the business as a 100-mile foot race. Everyone has the goal to be a high producing broker. If you view that as your finish line, view every day and every extra hour you put in as an opportunity to get a few miles ahead in the race. If you show up at 7 a.m. and stay late, you're going to get further quicker than the guy who thinks that this is a 9-to-5 job. This career is not going to happen for you. You have to go out there and make it happen for yourself. And by the way, that finish line, I'll say that 3-year finish line, that's really the starting line, because that's the point in your career where you've done some deals, you've understand the market, you've got some clients, and that's where the fun begins. That's where you can go out and actually start doing deals, having a good time, making lifelong clients and friends through the process.
Awesome. Well, I'm convinced. I'm joining. I'm going to be your junior agent. It's really been tremendous to spend this time with you to learn more about this area of the market. Thank you so much for joining us and sharing your insights, especially on such important topics. I really do appreciate your time today. I know you're very busy, so thank you for taking time out of your schedule to sit down with us.
Yeah, thank you very much. Really enjoyed it.
Now, what's the best way for people to get in touch with you if they want to reach out and connect and talk about deals or tenants?
Yeah, well, like I said earlier on, I love networking, so anyone's welcome to reach out. Doesn't have to be work related. My email address is Landan, spelled with 2 A's, .Dory, like the fish, at avisonyoung.com. My cell phone number, which is the phone I do all my business from, is 432-288-7162. You can find me on the Avison Young page. You can go to netleasebeast.com and get all the information there as well. And yeah, definitely go subscribe to the newsletter, check out the YouTube page, and reach out.
I'm a big fan of your videos. I actually subscribe to your YouTube channel. I really appreciate the content too. So for anybody that's out there, go check it out. Thank you to everyone who tuned in today. If you enjoyed this episode, do not miss the next one. Visit go.crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. Of course, you can also subscribe to the Crexi Podcast on your favorite podcast app and check out our YouTube channel for video recordings of each episode. Take care and be sure to tune in next time.